Welcome back to the Dividend Diplomats YouTube, everybody. You got Lanny and Bert here, the Dividend Diplomats. As always, we are here to bring you another exciting YouTube channel about a company that is set to release earnings this week.
Smash that subscribe button, give Bert and I a thumbs up, turn that mother sucker blue. We're trying to bring you this valuable content, and today we've got a very big video to talk to you about FedEx as they have an upcoming earnings release and what this could mean for you as an investor and a dividend investor.
Yeah, so in this video, we are going to talk to you about some of the major news we've been seeing about FedEx over the last few weeks, what we're expecting from an earnings standpoint, and we're just going to bring you any other news. And guess what? On top of that, we're going to run FedEx through the Dividend Diplomats Dividend Stock Screener. So everybody, sit down, pour that coffee, get ready. We cannot wait to talk to you about FedEx ahead of their earnings call on Tuesday.
So why is FedEx important? Well, first, they pay a dividend. As dividend investors, we love dividend stocks that keep that passive income stream coming each and every quarter to your portfolio. And FedEx is no different. Now, you may know their competitor as UPS, so you really have two beasts in the transportation industry. And with e-commerce being so relevant today, with COVID-19 and the global pandemic, you know transportation and shipping has gone up and not down. Now the question is what does that mean for FedEx and their stock price as well as their future dividend?
Well, to me, Lanny, with e-commerce booming the way you're describing to me, it sure as heck sounds like we're going to see some top-line revenue growth here, maybe some expenses growth, but overall this is going to be a positive for FedEx's stock, in my opinion.
And if you look at FedEx's stock price year to date, they have surged greater than 50% year to date. And we're talking, I think, close to, if not over 100% in the last 5+ months since the downturn in March.
So it looks like that's the expectations of what Mr. Market's been factoring in for the company as well.
Right. So as we run them through the Dividend Diplomat Dividend Stock Screener, you already know the metrics, but in case you don't, we're going to focus on three main metrics. One is the price to earnings ratio. Two is the dividend payout ratio. And three is the dividend growth and that growth rate history.
And I am very excited to see how they perform in our dividend stock screener.
So Bert, you were talking about articles that have come out to discuss what's going to happen with FedEx and what could happen with the FedEx stock price. What are you seeing right now?
And people are getting bullish about FedEx here. One of the things that we've been reading as we've been performing our research for this video and overall investing research is people are becoming very bullish here on FedEx stock price. And I'm talking recently too. We've seen some estimates that have increased their stock price target up to 50 and 60% from their levels. That's a huge appreciation right there.
Right, and I know there's one analyst at Cohen that even raised her price already into the mid 260s.
Oh.
And FedEx is currently trading at $232.79 as of the market close on, September 11th. So you're already talking, a lot of appreciation right now on that target price.
Yeah, I mean, that's huge. And one of the main drivers of it was another big article that came out recently about in the shipping industry in general. FedEx, UPS, the USPS all announced price surcharges that are going to happen during the holiday season as well. So it could be on average of $1 to $5 per package, depending on there. But that's going to be a huge boost to FedEx's top line in their peak season as well. If we thought e-commerce was big during the last few months, we all know how big it gets during the holiday season. Think how many packages you buy online and ship to get people those gifts before the holidays.
So now that we know what the analysts are expecting, why they're expecting, surges in the stock price, in revenue, in earnings, as dividend investors, we want to start running them through our dividend stock screener. So we'll start with that beloved price to earnings ratio. Analysts actually right now are projecting in the year 2021 to have earnings of $10.95. And that's based off of 27 current analysts reviewing the FedEx stock, compliments of Yahoo Finance. Now taking that $232 and some change share price and dividing it by that earnings expectation, you get a forward price to earnings or forward PE ratio of 21.26. So that means that they are trading at 21 times earnings right now, which surprisingly compares favorably with the overall S&P 500, which is currently in that 29 to 30 times earnings right now.
Yeah, we are in a crazy stock market time if the S&P 500 is trading at that high of a multiple. And I mean, going forward too, this will be a huge earnings release for that reason. If everybody's forecasting earnings growth when earnings are announced on Tuesday, it'll be cool to see how analysts may change their estimates going forward too. This could be a completely different PE ratio as that denominator increases with earnings growth.
So with earnings growth, as a dividend investor, you really want to see something more from FedEx. FedEx sliding into the dividend metric number 2, we'll have to take a look at what their dividend payout ratio is. So, and what that increase in earnings will mean for that payout ratio. So FedEx and their stock currently pays out a dividend. It's pretty significant, but it pays out a dividend of $2.60 per year. So when you divide that by the $10.95, you do the math, their dividend payout ratio is what, Bert?
I'm calculating 24% dividend payout ratio, which is well below that 60% threshold we use. Heck, we even say the perfect payout ratio is between 40 to 60% as well. FedEx is well below that, the low end of our mark as well. So that indicates to us there's still a lot of room to continue growing that dividend going forward if the company so chooses.
So the safety of that passive income stream via the dividend income is very safe with FedEx.
Yeah, I'm not losing any sleep over that.
No. And if you are, then you better start, working for FedEx and transporting some deliveries during the holidays. No, but honestly, when you look at the FedEx stock, their earnings, their dividend, payout ratio is so low, which also means that they're trying to reinvest back into their business. And even in one of the articles, I know FedEx is trying to go after the rivals of Amazon. So when you think Walmart, you think these big box retailers that are also shipping goods, FedEx is trying to attack those rivals of Amazon.
Yeah, and that's not going to be cheap either, people. Think about how much cash Amazon has. They don't pay a dividend. They don't care about returning anything to their shareholders. In fact, they are all about growing their business. So to compete with a company like Amazon, FedEx is going to have to significantly invest in their infrastructure to compete, which isn't a bad thing because look at how some of the analysts are projecting the company right now. Everyone's saying FedEx is doing very well. So something's working. It just takes a lot of cash to get there.
So now that we've gone over the payout ratio, it's time to slide into third base with the dividend growth and dividend growth rate. Now, we already talked about how low that dividend payout ratio is. And this is where I have to bring some sad news for FedEx and their dividend.
I'll sit back here while you tell this.
Get the tissues ready.
Yeah.
FedEx last increased their dividend at the end of 2018. 2019, they did not increase their dividend. 2020, they did not increase their dividend.
Man, that is not what we want to see here.
Right. So if your earnings are increasing, your dividend payout's staying the same, naturally your payout ratio is going to decrease. So their dividend growth is actually, not to say up in the air, because they still pay a dividend, but increasing that income stream, FedEx has not done in almost 2 years.
Yeah, and it'll be interesting to see how long this streak of no dividend increases continues if the company wants to continue investing to compete with an Amazon. The last point we were making goes hand in hand with this one. It'll be very interesting to see how this plays out.
Owning FedEx stock as a dividend investor, you want your passive income stream to grow. And, with FedEx right now, not to say that's been in jeopardy, but your income stream right now is not growing. The wild part about FedEx and owning their stock is that dividend growth rate, even when you include 2 years of no growth, is still a blistering 23%.
See, I knew Lanny was going to say that, and I'm still shocked when I hear the words actually come out of his mouth. That's insane. So 2 years of no growth, and they still had a 23% average growth rate. Insanity.
Yeah. So you've heard the price to earnings ratio for FedEx and their stock. You've seen the dividend payout ratio and what that means to the safety of your passive income stream. We've talked about the dividend growth and what that means for your passive income stream to grow, there's a fourth metric that we've been bringing into our videos.
Here we go.
And for the FedEx stock, Bert, what is their current dividend yield on the FedEx stock?
Ooh, this is where it gets really interesting here with FedEx. They are yielding just over 1.1%. That is a very low dividend yield. As the S&P 500 is currently in below 2 as well, but it's on the higher end of that spectrum. So FedEx is trading with a yield much lower than the market. Again, that's not exactly what we like to see. This isn't at all where I want to find a low dividend yield. And quite frankly, when we're looking at low yield dividend growth stocks, what we expect is to see a high dividend growth rate to compensate for that low dividend yield. Interestingly, if FedEx is not increasing their dividend and they have a low yield, that's not the combination that we ideally look for.
Yeah, that's not the 1-2 punch or the 1-2 delivery that you want from FedEx right now, as they deliver those dividends to your bank account. No, but so you've heard here right now, they have a price to earnings above what, 21 slightly.
Yep.
Their dividend payout ratio is at 24%.
Yeah, their dividend growth is nothing today, but ironically very large over on a 5-year average basis. And their dividend yield is well below the broader market as well.
So what I'm expecting is to FedEx to have a great earnings report on Tuesday and their stock price to ultimately go up. But what I also expect is dividend growth to resume in 2021.
And he's hot take right there.
Yeah,
dividend growth is resuming next year.
That's my guess, and I'm gonna go on a very large whim. I'm expecting greater than a 15% dividend growth rate in 2021.
Wow. So from 0 to 15% right there.
Yeah. Again, FedEx, they're very necessary right now.
Yeah.
If you're a retailer, just to even take that one industry, you need to ship your goods to consumers. And currently, unless you're Amazon doing your own, you have Walmart, you have Target, you have a lot of big retailer names.
Yeah, and its volumes continue to increase for FedEx and UPS, as we saw when they released their earnings a few weeks ago and their stock price jump. I don't see how it would be any different for FedEx in this current climate for all the reasons Laney just said.
So when you think of FedEx stock and their earnings to come out on Tuesday, and remember, this is before the holiday season for transportation, now may be a good time to consider buying FedEx stock before that share price surges into next year.
Yeah, so please let us know in the comment section here as well. What are you thinking about FedEx? Are you buying before the holiday season? Are you expecting their earnings to increase as well? Just give us your general thoughts on them, and we're excited to read them as always and respond back to your comments.
Again, this is Bert and Laney from the Dividend Diplomats.
Over and out.